Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. I'm sorry Chelsea's not here. She's not feeling great. She'll be back tomorrow. I hope everyone had a great weekend. If you're watching the local TV networks, you probably heard a lot about whether or not the Fed can actually raise rates. Can our economy handle it? And that's pretty much the debate right now, because if the Fed raises rates, the U.S. dollar goes up, commodities get hit, and that'll hurt overseas countries. And how does everything, line up? And can we finance our crazy debt with a little bit higher rates? So there's a lot of question marks, and I think the market, which has been in this range for like multiple months now, has a lot of question marks whether it can resolve, or do we stay in here where you have to sell things when they look good and buy them when they look bad, and take trades along the way. Well, starting overseas, you had a pretty uneventful weekend with the G7. Okay, so not a lot going on there. If you look at the FXI, you'll see that still, technically broken below the 200-day. It actually got obviously annihilated over the course of the last 2 years. You had this move off the lows, and it's quietly pulled back into a decent support area. So this is something to watch to figure out whether or not maybe overseas in the morning when you wake up, it could be a tailwind versus a headwind for our futures. And right now, you have a little bit of a reversal low here in the Hang Seng, and now the question is, can it take back the 8-day to maybe get up to the 21-day? And if it does, that would be helpful, for the bulls this week. So we'll see if that happens. We'll see if that, adds a little fuel to our market, because, overseas has been a little bit of a headwind. You go to Europe, the EWG, which is a proxy for the DAX, it also has been, a headwind, where, the correction phase that started, you did get a move off the lows, but, it somewhat broke it here. It went above the 200-day with a gap up and then lost it and retested and continued down. So now the question is, can Europe, be a little bit of a tailwind also versus just a headwind? And this morning when the futures were up a little bit, the DAX was up a little bit, and now the DAX is back down. And I guess you could, see whether or not the EWG holds this spot or not. Okay, here is the gap from Friday. That's, I guess, support number one, which is, 25, 24, but it probably gets filled. But if you look here too, close up, here's your ascending channel off the lows. All the moving averages are, above it, not below it. So basically that tells you have to be very cautious. You have a cautionary stance on even Europe. So now that takes us back to our markets, where futures were up 5 handles this morning, then they were down, now they're flattish. I think a lot of traders aren't sure what's going to happen this week. Last week, a lot of us were leaning bearish, including me. I was thinking that a head and shoulders top pattern could give us a fierce, awesome move to the downside with some volume and some momentum. And there was a downside move, but it lacked a lot of power. We talked, think about in your head, what did Red Dog say? We break below 2040, where can we go? We broke below 2040, we went to 2025-ish, and then on Thursday reclaimed it, and that's when on the VTF you saw us cover some shorts, position a little long for maybe a VWAP, or max pain type of Friday into options. And that's what you have to do lately. You have to think ahead. What does the market really want to do? How will the most amount of people be that frustrated and lose money? So we had that move on Friday. I think the spiders went as high as 206, and the S&P went as high as 2,058. So now we see whether or not was that move just to burn off the oversold condition and frustrate people with puts and calls, or do we hang here and then maybe have enough constructive looking stocks, which we're going to get into, to trade a little bit higher. So here is the SPX, and you will see that to start the week, last week you had that head and shoulders top pattern. You did get some downside. We did break below this 2040, but not by much. You could have made a little bit of money to the short side if you were really fast and you didn't add on weakness. And then you did have, which some of you know very well, that red dog reversal. The red dog reversal happened right here. What's a red dog reversal? You push below a prior low. This was 2034. You made a low here of 2025. Come back above it. You cover some shorts, take a little bit of longs, and then this was your small follow through on Friday. So now the question is, you always have 2 descending channels. You have one right here, and then you have one a little bit closer. So can the bulls have enough power to squeeze above this to then maybe get to that? And that's what we're looking at. Or does Friday's gap fail, and do we start heading back down, and this just shook everyone up? I'm not so sure. So what you want to do is you want to write down 2,058. That's Friday's high. We trade and close above this. Anyone kind of short here gets a little worried, and then maybe have a bigger move, towards 2,070. If you go to the spiders, okay, because that's what a lot of you guys trade intraday, you have a gap from Friday. So we'll see if it protects it. So this is a very important pivot support. Pivot support here is 204.86. Right down 204.86. Maybe it pushes below, comes back above, and you get a tail, and you could be kind of long for that. Or it holds, has an inside day, then maybe it takes out Friday's high of 206.10 and then gives you a bit of a squeeze. Okay, the next point of reference would be 207.34 right here, and then that high. But if this gets taken out and we close below it, then all of a sudden this comes back into play. But the trade on Thursday was the red dog reversal. When it went below 203.63, put a bottom tail in, came back above it. You get a little bit long, you hold some, and you had a good Thursday, Friday, and maybe you made money earlier that week. So here's where we are now. So what's going to help dictate the trade? With all the Fed speak, and a stronger dollar, that means maybe commodities get hit. And oil, made weekly highs a week ago. At the same time, energy stocks did not. So maybe the energy stocks smelled that the high level in oil couldn't be sustained. If you look real quickly here at USO, it's been acting well and trending higher. And so now we'll see if that changes. It's still below the 200-day. And here's just your high level spot. Okay, so this is something that if you're long oil and you're a momentum trader, okay, that is an upper level stop for you. Okay, if you don't take pain or you don't like pain. If we trade and close below, just say, what is this? This is 1161, which we're near. I'd say give it a little bit more room. Really, it's 1144. But underneath it, you have the 21-day, and the 21-day held right here, and the 21-day has been holding pretty much since April. So high level, and then this is still okay. I feel like the market's not going to fall apart unless all of a sudden the 21-day gets taken out. So here's support 1, here's support 2. If you look at the XLE, you'll see that basically the high in the XLE was made in late April, and it did not happen. Okay, last week or the most recent oil high. So now here it's still tight. You still have a nice ascending channel that it's well above. It's still above the moving averages. So we'll see if oil does get hit with dollar strength, and people think a Fed rate could happen in June or July, then and you want to be short oil or short oil stocks, you're going to have to first get a trade and close below 65.50, and then you have here 64.50. If oil pulls in this time and the oil stocks hold well, okay, because they don't think it's going to come down too much, then above this spot would be very helpful for the markets, and then here is bigger resistance. So we'll see what happens in the next few sessions with oil, and then how the oil stocks correspond, and same thing for the market. And then on the flip side, with the hawkish Fed, you have banks. Banks got a big push on that Wednesday and have had 2 inside days since. So in order for the bulls to stay somewhat constructive, or there be stocks that can help lead things a little bit above this inside range in the S&P, you probably need the banks. What's the best bank out there? JP Morgan. So that's what you want to watch. JP Morgan had a big wide range bar. Okay, remember that? Took out resistance, and now it's holding above. So in my note this morning, if you're kind of new to it, the way my language is, if JP Morgan can hold above 62.90, okay, which would be half of this wide range bar, there's a chance that it wants to continue after creating a flag above 64.20. And if JP Morgan happens to go above this, that would probably mean the market's acting somewhat bullish, and you probably could be trading the spiders from the long side. So, if all of a sudden it negates these 2 inside bars and heads lower, chances are, this meaningful move doesn't mean much. You can look at a few others the same kind of way. Citigroup, also 2 inside days. So the question is, can it resume the strength of that Wednesday, or was it a one-day wonder? So here is that. So my language here, very consistent, would be if Citigroup could hang above 44.60, which is right here, there's a chance it starts to move higher, takes out this pivot, and it would actually help the market. One other stock in the financials I think it's interesting to see is Goldman. Goldman already gave it back. Here was that one-day wonder in Goldman Sachs, and now if the market were to turn lower, this is probably one of the weakest banks right now. So you'll see whether or not it gets below 153.77 and stays below it. So that's some things I think traders are going to be watching to start the week, and then obviously traders are going to see in high beta tech, are things acting better or not? Everyone knows that we've been focusing on Amazon and Facebook because they had the best earnings. They had a pullback, they had a little bit of a bounce, and now what's next here? So if you go to Amazon, you go first here. Amazon did hold this spot. Remember this spot it came into last week? It held to 688. You had a little bit of a bounce, and now I would say, let's see if Amazon could hold Friday's low. If it could hold 700, chances are maybe with another inside day, if the market's going to go higher, it's going to need Amazon to help lead because that's what Amazon does in stronger tapes. If it doesn't, that could breed some skepticism. So here's 707.20. So maybe we get an inside day where it holds 700, and then if the market wants to be strong, it takes us out. If it fails and goes below it, that'll give you some clues to be a little more risk averse. Facebook, the same thing. There was a report that most hedge funds are now positioned in Facebook. Uh-oh. Does that mean it's over? I don't know. I don't think so, but you did have a failure here at 121. I remember I was trading that, and it broke to the downside. But then last week we had a nice little red dog reversal, which I did get long, but I sold on Friday. Now we'll see whether or not there's any power here. So I would write down 116.95, which is Friday's low. Write that down. As long as Facebook stays above that 116.95, it could be deemed somewhat strong still. Well, it's still strong anyway. Look at the size of this gap, but I'm saying within this range. So if it holds 116.95, maybe there's a chance that it takes out this inside range, and that would mean it's got to get above 118, and that would add a little bit of maybe fuel for the bulls. If not, just be careful. It's been a little wishy-washy. The trade's been very slow and lethargic for Facebook, so we'll see what's next. So, we'll see what Amazon and Facebook do. On the more broken side, you did have Netflix wake up a little bit last week out of its lower level. So if you look at Netflix, Netflix has this lower channel. Yes, and Netflix is definitely in the penalty box, and it's been technically broken and it's lost momentum. It's not the same Netflix as we had here, when you had a big gap up and then it stayed above the 8 and 21 day for multiple months. Now it's different. It's below the 200 day. It's below this ascending channel, but doesn't mean that you don't have a potential for a trade. So down here, which is where we all live, we trade from day to day. You had markets come in, the S&P made lows on the week and Netflix did not. A little bit of relative strength. Now it's poking its nose against a resistance here. So I'd say as long as this holds above, just say, you could say 89. Some would want to even go a little bit tighter. You go to the 5-minute chart on Netflix. You go here, you'll see that, you could probably say, I don't want to give it that much room for Netflix to really hold. For me, it stays above 91, 91.50. And then perhaps if there's volume and you see the relative strength continue, you get a trade above this 93, and then it heads towards the 200 day. But again, it's hard to trust this stock because it's lost momentum. Just because it showed a little relative strength last week, take care. So, but this is a spot. There might be a trade here. I'm going to look at Netflix and see if there's something there. And then you have Tesla, that shady scenario from last week. But it was tradable. If you didn't get caught, I got caught. I bought it. I took it home the next day, or that 4:01 when the news of the secondary came out. If I wasn't long it, maybe I would have thought better and I would have positioned into it because we were waiting for the secondary news to position after the big pullback. But whatever. So where's Tesla now? Tesla. Remember that huge move that everyone was all up in arms about. That V bottom that happened here. Well, once I think people got word that the secondary was coming, it broke this inside range and came in, because obviously they need to price a lot of shares. They do it in the hole. People get a little worried by doing it higher. So anyway, we talked about can it break above this 215. They priced it very well at 215. So anyone who was still short said, "Oh my goodness, they didn't price it so in the hole. It's very tight." So shorts cover. Guys who got the free stock, was able to sell it whenever they wanted to, and now we'll see how Tesla handles the 200 day. 200 day in Tesla is closer to 223. So this will be a spot I don't blindly say short it there, but I would not be chasing it long. Just know it exists. And then also you could write down Friday's high of 220.55. But nice trade for some that didn't get caught. And now it's back above the 8-day moving average. Here it was below this entire time. Now it's back above. So maybe that creates a bit more of a constructive buy the dip, better trading vehicle than it was down. Actually, this was good for the shorts, right? It broke the wedge, boom. But anyway, we'll see now if it holds in. And now, as we talk about stocks that are acting better, that have held their tactical 8-day, in the mega cap world, you have Apple, right? Apple came out with the news. Berkshire Hathaway had a stake. I was thinking short, and we made good money short that week before, below 92. But then on that gap up, it held and it changed. Apple reclaimed the tactical 8-day moving average right here, right? Here it was above it also. Remember, we were trading in the start of the year. We were having some fun with Apple. It was above the 8-day. Here was a nice little trade. Then it held again, and then you had this gap up, and it held again, and then gave you a little 90 bar there. And then this is when it got weak again. Boom, we were out. So now, after this overthrow move lower that had no downside follow through at 92 on the gap up from Berkshire, here's when it changed a little bit short term. What did it do? Oh, look, it reclaimed the 8-day. If you're above the 8-day, you're a little bit stronger than you were when you were below it. So if you've been trading it from the long side, congratulations. It's a higher low, higher low. Here, it held again, and it closed well, and now it's up a little bit. So I guess it could work its way up towards the earnings gap. I would not be chasing it up 60, 70 cents today, but it doesn't mean it's a short. See the composure of it. I was long from Thursday into Friday, thinking that they close it around 95 or so. I'm not long it now, so we'll see if there's an entry if you're following me on the VTF. But ultimately, this bar right here changed the gears. It gapped above and held above this small pivot area and reclaimed the 8-day, and it's been above since. And as long as it's above it, try not to have too many opinions there. There's not much else going on in mega cap land. Microsoft still doing a whole lot of nothing in the penalty box. I wouldn't not overtrade Microsoft. At some point, maybe it takes this out if the market wants to be strong. If not, look to see if it breaks to the downside here. Some still think this is a big bear flag that can continue lower. We shall see. IBM is kind of coiling. At this point, this stock got a little bit of a pass after earnings. It was one of the few that actually filled the earnings gap. Remember this right here. Okay, now it's coiling. So it's in this descending channel here. Maybe at some point it takes this out, and then you get more upside. If the market wants to be stronger and be constructive, they could come for IBM, and that would help the Dow and help the S&P, right? So here is your descending channel. Put that on the radar. And I don't really trade IBM that much, but every now and then there's a trade there, and it looks like a trade is trying to set up at some particular point. As far as other sectors, the bios have been broken. I'll just give you a quick look at the bios. Sometimes there's a trade from a lower level. Here it broke, there it broke. Look at that big potent move to the downside. Here was another ascending channel that broke to the downside, and now the question is, can this little support off the lows keep it there? At this point, I'm not so sure, but you do have a tight range. It did close sort of stronger on Friday for itself. And then, so see what happens here. Kind of trade and get above this 265. It's now above its tactical 8-day also, so maybe that could be helpful. I'm still kind of thinking a little bit more. Like last week, I was a little, neutral to bearish, where I was trying to be short. This week, I'm kind of thinking a little bit more. At least the first few days, can we hold in and push higher? But we shall see. The metals lost some momentum. We talked about that on that Wednesday. The GLD broke below the upper wedge, that 121.50. So that got a lot of people out of their options and maybe even out of their stock. That was right here. Okay, look at this upper wedge that broke to the downside. First time here it held, and now it's off a little bit, so use this as support to trade against. This is 118.92. I wouldn't overtrade this. It's now back below the moving averages, so gold has lost some momentum. The miners, have been great for a lot of people. Wow, big ranges here in the miners. Okay, if you sold it when it broke this with this engulfing day, you had a downside move, and some people even got long it, for a little bit of action. And now, if you want to put it in a box, this is the middle area of it to see whether or not it stays below. I think it's opening down a little bit. I don't think it's as crazy of a trade where you're at the ends of the envelope. So don't overtrade it in here. Same for Nugget. I know guys have been having good moves with Nugget. Congratulations if that's you. here too. Broke the 8 and 21 day, closed on lows, gave you downside follow through, and then boom, look what it did. It held the 50 day, giving some a place to be long, and now we'll see whether or not this resistance stays, strong here on that potent bar. So lots of things going on today. I don't know what the futures are doing right now, but they were up 5, down 3. Now they may be flattish. I am flat coming in. From short on the brain last week to position long Thursday into Friday. I was like, you know what, I'm not sure whether it was just one of those max pain option expiration Fridays, to make everyone who calls upset and puts upset. So I was like, you know what, let me start the week fresh. And, I guess thank goodness we're flattish, so we'll see some of the things that might want to show their face on whether or not we can move to the upside a bit or not. How do we handle a little weaker oil with a stronger dollar with all the Fed jawboning? How do the banks hold up? Do they hold 50% of that move from Wednesday? Do we have those levels? Does high beta tech remain constructive? Could Facebook and Amazon get back on their game? Can Apple stay strong? Can Netflix hold out a lower area? And then you have some retail names that are in play, and then you have that big takeover of Monsanto, but that's in the ags, which I'm not looking at right now. So we'll put the pieces of the puzzle together. I'm not expecting anything huge. I think those who are trying to be, those who are a little bit more predictive are doing better. Knowing where lower ends of the ranges that might be hard to press are a better buy, and then knowing where after a rally, better spots to sell versus add. And when ranges are tight, there's not that much meat on the bone. You got to take what you can get. And it doesn't mean we're not going to resolve and things are going to change, but until that happens, be very selective, know where your stock is and what you're looking to get out of it, and make small little steps, so this way you don't get frustrated overdoing it. Hope you had a great weekend. It's the start of a week. Let's make sure it's a good one. I'll see you at the recap. Have a great day trading.